Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Mr. Daniel Yu, global strategist at Yuanta Securities. Mr. Yu, thank you for coming on today.
Thank you for having me today.
So coming off a series of new highs, stocks on Wall Street were down overnight on concerns about the coronavirus. What's the story there exactly, and where do you see things going from here?
Sure. It seems that the distrust of the Chinese data continues to exist. China's Hubei province reported that additional of 116 deaths and 4,823 new cases as of the end of February 13th. Of the new cases, the government said that 3,095 were clinically diagnosed. So it's like a separate way of looking at things. In total, Hubei authorities said that 51,986 people have been infected in the province. After this, the United States have said that they have very little confidence in the information coming out of China regarding the count of the coronavirus cases. Clearly, this has impacted globally. Most of the market fell because of that news and continuation of the uncertainty regarding the coronavirus exists. However, though, if you look at the U.S. market, at the beginning of the market, it fell as high as 1%, but mostly that losses were recovered. NASDAQ closed at 0.14% decline, and S&P was only down 0.16%. The reason for that is because a lot of people already suspected that numbers were probably underplayed, and also a lot of people are expecting much or more aggressive government boosting measures, both sides from the U.S. as well as China. So if that's the case, then market seems to be taking a bit of a breather. Of course, it might be difficult to rise further continuously, but also at the same time, it might not fall as significantly as most people are worried about.
Well, now here in Korea, the Kospi might have taken Wall Street's cue, but in fact it was up today. What happened in Korean stocks?
Yes, as you said, that is the case, that Kospi has rebounded by 0.5%, and Kosdaq was up about 0.2%. It seems that the market is taking a bit of a relieved rally or relieved rise per se. And main reason for that is because yesterday was the option closing day, so volatility had occurred. However, today, because of the additional aggressive measures by the government on both sides from the U.S. as well as China, and also Korean government is saying that they will monitor this quite aggressively. So they have a bit more dependency on government measures. The concern of the COVID-19 continues to exist, but high dependency on liquidity injection exists as well. The Federal Reserve of U.S. said that it is closely monitoring the coronavirus and its impact on the China as well as the global economic growth. Jerome Powell said that they will do anything in the future if there is any sign of slowdown or recession, and that they will use the quantitative easing again. And they continue to say that they will continue to provide ample liquidity to support the system. It seems that that is the case not just for U.S., but global economy as well, and also that is for Korea as well. So therefore, people are having more dependency and trust in regards to what government is doing in regards to this incident.
Well, in other news, we see, according to the BOK, that Korea's export prices were down last month in won terms because of the Korean currency's recent appreciation. These figures, however, do not reflect the impact of the coronavirus. And, of course, the won has since weakened quite a bit. Tell us about these figures and what you think might happen this month.
Yes. The much-awaited rebound in South Korean export may not be coming as easily as export prices slid back in January to hit the lowest in more than 3 years, even without the news of virus outbreak setback. As you said, the export price index slipped about 0.8% on month to 96.59 in January after a brief pickup in previous month. And it is lowest since the January of 2016 when it stood at 93.46. Against a year ago, it actually fell 2.7%, down for the 8th straight month. This is clearly because of the Korea's high dependency on the memory chip prices. If you look at the memory chip prices, it plummeted about 41.4% for a year earlier. That is making that impact. However, though, we do think that the overall prices can recover if you exclude the coronavirus impact, as the more demand for the memory is actually happening. However, though, because of the coronavirus incident, the first quarter numbers are not going to look good because China's demand slowed quite significantly. So therefore, for the short-term period, the export price is not going to recover that much for the time being. However, though, if the coronavirus does settle down with the spring coming, with a higher temperature, then I think that the recovery in the export prices can happen in the second quarter. But for the time being, still everybody is skeptical in terms of how that's going to play out in the future.
All right, Mr. Yu, we'll be watching that closely, but I have to leave it there for today. Thanks so much for sharing your expertise. We appreciate it.
Thank you very much.